Hi everyone. Financial statements. The first thing you need to know about financial statements is you can go into the Tools options and set how new projects are presented. There's the chronological order and there's the reverse chronological order. People like chronological order because that's typically how they read financial statements from left to right. Other people like reverse chronological order because the most important information is closest to the left-hand side and gets read first. You choose whichever works for you. The important point is all new projects will be set up that way. You cannot go back to a project file and change it in the middle. So set it, and leave it. The next step is to look at the project assumptions. We have entity type. The entity type will change the balance sheet. So you can tell that common stock and APIC are on here. If I go to the assumptions and I choose partnership, when I come back to the balance sheet, you can tell that I have the capital percentages or the capital amounts that are allocated to a particular partner. The next are the fiscal periods. The fiscal periods need to be set up so that the labels at the tops of the columns work. So the first fiscal period, this one here, is set to be a 12-month period ending for whatever time period you have. Inside of Pro, we have up to 10 columns of data, so we're looking for 10 years. The last fiscal period in does not have to be a 12-month period. It can be something in between, a stub period. We do not handle the case of a stub period in between. Say, for instance, a tax year gets changed 2 years ago, and so there's a stub period in between. We don't handle that particular case. To change these dates, there is the drop down where you can show a calendar item. You can also click on a particular the year or the month and use the arrow buttons to go up or down. Or you can highlight over the top of it and type it in. What happens in this case is that the periods at the top of the columns get changed. But the data inside of the columns stays the same. Going back to the project assumptions, if I want to add a new period onto the front end of this, in other words, last year I did an engagement for a particular company, usually these are ESOPs. This year I want to do the new valuation. I can choose Add Fiscal Period. By clicking the button, it will copy the data from one column to the previous column and leave an open column at the most current year. So if we go to the historic income statement, you can tell that this particular column over here was added and opened up, and information that used to be in this column was copied to this column, and information that was in this column was copied to this column, and it gives me my periods. If I have a period on the back end far ago that I don't want to see, then I use the project assumptions here and I use the labels to change that. So I'm just going to push that up to 2011, and when I come back to my income statement, you can tell that that particular column got hidden. So let's talk about the financial statement assumptions. The out of balance indicator will on the balance sheet give a little red indicator saying that, hey, my assets don't equal my liabilities and equity. If I'm seeing an out of balance indicator and I don't want to have it show, I can uncheck mark it and it will disappear. If I have a stub period, that is in the project assumptions, if this month does not match this month, then I'm going to have a stub period. And on my stub period, I can annualize that. I can use it no annualization at all. In other words, I'm just going to show it but not use it. Pro rata, that's typically how people do it. They're going to say, okay, I'm using 3 months, well, 3 is the wrong number. I'm using 7 months out of 12, so I'm going to take 7/12 of this and project it as if it was 12/12. I can use a sales cycle. Some businesses are very intensive to a sales cycle, retail businesses with the Christmas season, items like that. I can also use the last 12 months. If I have the different financial statements for each month, I can calculate what the last 12 months was, and I can subtract out and add back the appropriate periods. Or I can just type in my own numbers and say, here's how I'm going to forecast this particular stub period. So the COGS and inventory are for service industries. If I don't want to see cost of goods sold on the income statement and inventory accounts, I would uncheck mark that. The pass-through is for S corporations and LLCs that are being treated as that, so you don't see any tax lines on the historic income statements. If I check mark that, then there'll be no tax lines on the historic income statement, and it will allow me to say I want tax lines on the adjusted statements. Or if I don't want to see those, I can uncheck mark that and I won't see that. So the pass-through lines is typically going to be uncheck marked for most corporations. The adjusted balance sheets, I can show all periods or I can show the most recent only. If I only have the most recent only in there, keep in mind that I'm only going to be able to use one period when I'm looking at ratios. And then summary statements. I always recommend leaving the show summary statements on because the summary statements drive the models, and that's how I double check that I input information correctly. Let's go to the income statement and see how the taskbar buttons work. The taskbar buttons are these items up on top. When I click on title, I'm allowed the opportunity to change the title of the schedule. When I click on Analyze, you can tell on the right-hand side of the screen that my min, max, and those items that are analyzing the financial statements get to disappear and show and hide. Insert account will, if I bring focus to a particular row and I click on Insert Account, I can insert a new line item. I can insert it as an account or a sub-account. I can insert it above where my focus was or below. I'm going to leave the title as new account, but it's pretty obvious that I could have that be any title I wanted. What type of account is this? We have a concept called anchor accounts, and by using the same type of anchor accounts, think of those as headings on an income statement, we are able to add and subtract things appropriately. So if you tag something as revenue, it's always going to show up as a revenue item. If you tag something as operating expense, it'll be in the operating expense item. And the most important one is number 5 down here, select a property. If you're dealing with depreciation or amortization or interest, those have a big effect on the benefit stream we use in our income models. And so you need to tag these correctly. By pressing none, we're going to say this is a cash item. Cash is collected or cash is paid, and therefore we can tag that property. So when I press OK, my new account will be inserted into the income statement. When that happens, it not only inserts it on the income statement, it also inserts it on the normalization adjustments. You can tell that my new account is here. It inserts it on my adjusted income statements, so I get to see the new account here. And inside of the financial analysis, underneath common size, I can see that the new account has been added in that particular common size as well. I can also modify the account titles. So instead of revenue, I can type in, product line 1, and this would be product line 2. Now when I type over the top of these, you need to keep in mind that the property of that particular account did not change. So the last item over here is edit account. And when I choose the edit account, I can now come in here and say, look, this here is a non-cash item. And it would show up as non-cash in the revenue line. If I wanted to move these, I can move them inside of the same anchor account group by pressing move. And it's going to say, current line is product 2. Where do I want this? I'm going to put it above the sales line and press OK. And it will move the account up there. Again, it's happening not only on the historic income statement, but also on the other 15 or 16 schedules that exist out there. If I don't want my product line 2 account anymore, I can press delete, and the delete will delete that particular row, not only from this schedule, but from the other 15 or 16 schedules that it is affecting. The taskbar buttons make it easier to use than Excel itself. If I was in native Excel, I would have to be careful about adding columns because you can tell that we copy data from one column to the other, and I would have to be careful about inserting rows. Not only would I have to do it on the historic income statement, but I'd have to do it on all the other schedules that flow from the historic income statement. Normalizations, common size, growth rates, all of that happens. Once we've input our financial statements, the next step is to normalize. So the easiest way to normalize is to click on the particular year and the particular row that I want to normalize. I click on Edit Adjustments, the taskbar button, and I get a dialog box. The dialog box will allow me to put in a key, put in an amount, and notate this. I can also input more than one particular line item for an account. So say for instance I needed to adjust something up and just adjust something down, I can have two notes that go to the same account. If this was like compensation where I want to apply this to all the years, I can click on the button down here that says apply this to all the years, and it will insert that adjustment on all the years that are available. But typically it is a year by year, account by account normalization basis. I press OK, and that normalization goes into the schedule. Down at the bottom of the schedule, it has my note. Now there are a couple of special cases inside of normalization. That special case is going to be the tax item. So when I click on Edit Adjustments for the tax item, I have two choices. I can use the tax table to collect it or to calculate it, or I can use manual adjustments to input my own number. So if I leave it as automatic and calculating from the tax table, I press OK, and it will automatically calculate what my tax amount should be for a particular item. The second case, special case is that when I choose on Edit Adjustments, I can also determine the footnote order. So the order that's showing up over here in this column, I can change and make that happen before or after. So if I change in footnote order is optional, I can type in a number there and get to where I want to be. The last thing is that the financial statements feed the summary statements, and the summary statements feed the income models. So I always like to show my summary statements and double check to make sure that the major categories are pulling forward correctly. In other words, interest and depreciation and amortization are correct, and I can tell that I have the right bottom line. Thank you.